Welcome back to the channel, and welcome to this week's Crypto Week in Review. This is where we take a step back from the noise of the daily headlines and look at the bigger picture, what actually mattered this week in crypto, how the market shifted, and what's likely to shape the days ahead. And this week, the stories cut across everything from Federal Reserve policy to institutional forecasts to pre-sale hype to speculation about new ETFs. It's been a week of ups and downs. And by the end of this breakdown, you'll have a clear sense not only of what happened, but of what comes next. Let's begin with the market backdrop, because you can't tell the story of the week without setting the scene. Bitcoin spent most of the week consolidating after falling back from that August high of 124,000. It now sits just above 110,000. The pullback isn't catastrophic, a 2 to 3% dip on the week, but it's enough to remind traders that nothing goes straight up forever. The rally that carried Bitcoin to fresh highs earlier this month has lost some steam, and for the first time in weeks, traders are wondering whether we're in a pause or the start of something bigger. Ethereum told a similar story, though with sharper moves. Trading around 4,400, it lost about 5% this week. That underperformance compared to Bitcoin isn't unusual. Ethereum tends to be more volatile, and when risk appetite cools, it usually feels it harder. But there's another angle too. Ethereum ETFs, which had been on fire, started to slow down. Last week we saw days where Ethereum ETFs even outpaced Bitcoin ETFs in inflows. That was extraordinary. But this week, the momentum cooled. Inflows didn't disappear, but they slowed. And with that slowdown came a sharper correction in Ethereum's price. It's a reminder that institutional flows can both fuel rallies and amplify dips. XRP continued to live up to its new reputation as the quiet survivor. While Bitcoin and Ethereum dipped sharply, XRP just drifted a little lower, settling just below $2.90. It's not exciting, but sometimes boring is good. After years of drama, XRP's stability is becoming a strength. Investors who want exposure without roller coaster volatility are starting to notice. Elsewhere, Binance Coin moved in step with sentiment around Binance, slipping slightly but holding near 860. Solana eased off as well, trading around 208, still way above its early summer lows, but caught in the broader market correction. Dogecoin remained glued around 22 cents, proving once again that meme coins have staying power, even when momentum fades. Tron held near 35 cents, driven by its dominance in stablecoin transactions, while Cardano hovered in the high 80s, neither breaking out nor breaking down. Toncoin stayed elevated after last week's dramatic whale buy, trading just above $8.50. And Chainlink closed the week near $18, lifted by one of the most important adoption stories we've seen in years, the US Commerce Department pushing official data on-chain. So that's the market snapshot. Red across the board, but with different flavors. Bitcoin and Ethereum correcting, XRP steady, altcoins drifting lower, Toncoin buoyed by whales, and Chainlink riding a news boost. And behind it all, the driver was macro. The Federal Reserve once again at the center of the story. At the start of the week, traders were hopeful. There were whispers about a possible 50 basis point rate cut in September, something that would have lit a fire under risk assets. But then Fed Governor Chris Waller spoke, saying he only supported a smaller cut, 25 points. That one comment flipped sentiment. Suddenly, hopes of aggressive easing were gone, and with them went some of the optimism fueling Bitcoin's rally. Stocks wobbled, bond yields ticked higher, and crypto lost momentum. This has been the theme all year. Crypto may be maturing, but it's still tied to macro. When the Fed signals liquidity, crypto rallies. When the Fed pulls back, crypto cools. And this week, we were reminded again that no matter how bullish the long-term narrative is, the short-term picture still depends on interest rates and central banks. Ethereum's story was even more interesting. After that burst of ETF-driven inflows, things slowed down. And it raises an important question. Were those early flows just pent-up demand, or is this the start of a sustained trend? If it's the latter, Ethereum could easily reclaim momentum next week. If not, we may see more rotation out of Ethereum into other alts. But make no mistake, the fact that Ethereum ETFs exist, and that they were even competitive with Bitcoin ETFs, is a seismic shift. It changes the game. Meanwhile, speculation found a new darling in Layer Brett. This Presale project, branding itself as both meme and Ethereum Layer 2, grabbed headlines with its dirt-cheap entry price of half a cent and outrageous staking rewards of 1,500% annualized. Everyone knows that can't last, but it doesn't matter. The number is the headline, and the headline drives attention. It's a reminder that speculation never dies. For every Ethereum ETF, there's a Layer Brett waiting to capture imaginations and wallets. Would you take a bet on something like that? Would you throw money at a presale promising unsustainable yields, just in case it becomes the next Dogecoin or Shiba? Some will, and some will win big. Most won't. But the fact that these projects still command attention shows that the retail speculative engine is alive and well. On the more serious side, Binance had a hiccup. Futures trading went down. Not for long, but long enough to freeze positions and cause anxiety. For an exchange that dominates global futures volume, any outage is a big deal. Traders rely on Binance to function smoothly. And when it doesn't, it raises questions about risk, reliability, and trust. The issue was fixed quickly, but it left a mark. Centralized exchanges are convenient, liquid, and dominant. But they're also single points of failure. This week was a reminder. Now a quick word from our sponsors. If you're holding crypto, make sure it's secure. Grab a Ledger hardware wallet if you don't have one already. Use our link in the description if you want to support the channel. Toncoin, on the other hand, remained in the spotlight thanks to that massive whale buy last week. $713 million, 8.5% of the supply. That kind of move doesn't fade quickly. It's kept Toncoin elevated, and traders are still speculating about what the whale knows, what they're planning, and whether others will follow. It's a bold bet, and the market is respecting it, at least for now. Chainlink delivered what might be the most important adoption story of the year so far. The US Commerce Department announced it would start publishing official economic data directly on-chain, using Chainlink and Pyth. That means GDP, trade data, unemployment figures, all verifiable, all accessible by smart contracts. For the first time, DeFi protocols can build on government data. Imagine an insurance contract that automatically pays out based on official disaster reports, or a lending platform that adjusts rates based on GDP. This is the beginning of that world. For Chainlink, it's validation after years of being the Oracle project. For the rest of us, it's a glimpse of blockchain's future as infrastructure, not just speculation. And then we had JPMorgan. The bank that once dismissed Bitcoin now says it's undervalued, with a fair value closer to $126,000. Their reasoning is simple. Volatility has collapsed to historic lows, and compared to gold, Bitcoin looks cheap. It's a remarkable shift. Just a few years ago, JPMorgan wouldn't touch Bitcoin. Now, they're calling it undervalued. That's institutional adoption in action. But at the same time, there are reports of institutional selling capping Bitcoin's upside. Funds are taking profits into rallies, keeping Bitcoin pinned below 113,000. So we're left with a tug of war. On one side, JPMorgan says undervalued. On the other, institutions are selling. Which wins? That's the question for next week. And speaking of next week, here's what to watch. Bitcoin is at a critical level. Holding above 110,000 could set the stage for a rebound. Losing it could open the door to 105. Ethereum remains in focus. Can ETF inflows pick back up? Some analysts still see 7,000 by year-end, but the momentum has to return. Pre-sales will also stay hot. Layer Brett has the meme angle. Remitix has the payments angle. It's already raised over 21 million in pre-sale, being dubbed XRP 2.0. If it keeps building, it could dominate the conversation. And macro, of course, never goes away. The Fed isn't done speaking, and more data is coming. If the message softens, risk assets could bounce. If it hardens, brace for more red. So as we close this week in review, the picture is this. Bitcoin correcting but holding key support. Ethereum consolidating after a surge of inflows. XRP steady and boring in a good way. Altcoins mostly red. Speculation roaring back. infrastructure maturing with Chainlink, institutions sending mixed signals, and regulators watching closely. So what do you think? Will Bitcoin hold the line or test lower? Will Ethereum regain momentum or pause again? Would you chase pre-sales like Layer Bread or Remitix or sit them out? And would you welcome a Litecoin ETF, or do you think regulators should stick to the big two for now? Drop your thoughts in the comments, smash like if you've enjoyed this review, follow so you don't miss next week's breakdown, and as always, we will see you at the top.